Morning, good morning. Bix Weir, roadtoroad.com. Put your morning horn of Z's, your sip of coffee/tea. Big news today in cryptos. I'll get to it in 1 second. We're seeing the pullback is continuing. Yes, it's manipulated. Yes, it's rigged. Yes, they don't want it to go up too fast before the summer/fall gets here. All of the above, we've heard it all before for the last 9 years. Those of you new to this world got all excited that they were moving up, and it's going to pull back, and it's going to scare people. Question is when to buy. If you're a buyer and you still have money on the sidelines, when do you buy? Buy. Just buy, and if you have a chunk of money, just buy every week. Say, okay, I'm going to put 10% in for a week for 10 weeks. And you're not going to be mad at yourself. The only way you're going to be mad at yourself is if you lump everything down when things are going up and then it falls back and then you get mad at yourself and depressed. 10%. 10% of your investment, put it in every week. And you'll be fine. Absolutely fine. I think my computer's about to blow up again. Hang on. Hold on 1 second. Yeah, I've been having computer issues again. I don't know what's going on. Too many videos stored on it, I think, now. Because I can't keep them on YouTube. I have a private archive so that history cannot steal all my information. Okay, hopefully this is better. So, cryptos, yeah. Nothing new. Everything's kind of holding fine. Again, like I said, there's no weak hands in there. It's just traders and manipulators. And hodlers. Well, hodlers aren't even in the exchanges, so the hodler value of their tokens does not get reflected in the price of your currency. Just remember that. The hodler value of your tokens does not get reflected in the price of the currency because they're not traded. You don't go on the exchanges. We all know the exchanges are fraud. Look at the Litecoin volume. $4.3 billion worth of Litecoin traded in the last 24 hours, and there's only 6 billion Litecoin that are in the world. It is insane. So, yes, and that gets me to my next point. Regulation. Is it good? Is it bad? Is it indifferent? I think good regulation is good, but we don't have good regulation. We don't have good regulators. They have had years and years to put decent regulations on cryptos, and they chose not to for years. And now they're trying to go after people who said, hey, if you're not going to put any laws and rules and regulations down, we're going to continue innovating. To a point. The latest, right here, the SEC is suing Kik over its $100 million KIN token ICO. And you know, the more I think about it, the more I read. I read. I'll show you in a second. I read the filing. They basically the KIN folks. KIN was it's a messaging app that is it's an ongoing company. It was a pretty big tech company. When they issued the Kik tokens during the ICO craze. And yeah, I get why they did it. The problem is they were regulated already by the SEC, and they really pushed far beyond the boundaries of what was acceptable. Saying, oh yeah, you're going to make money off if you buy Kik, you're going to make money. Yeah, you're going to make money. It's for profit. And all the things you're not supposed to say, you know, their fallback is it's not a security. So if it's not a security, they can say anything they want. They're basically goading the SEC, come after us, go ahead. So the SEC is. Other ICOs said, okay, SEC, we're going to play, you know, within the rules you've given us, which are very few, and we're not going to, you know, we'll work with you. Ken decided not to work with the SEC, and this is what is going to come of it. Now, a couple interesting notes on this. Let me read part of this article of what Ken and Kik are going to say. The SEC has issued Kik Interactive Inc. Has sued Kik Interactive Inc., alleging the Canadian-based chat platform conducted an illegal $100 million securities offering of digital tokens. SEC says Kik sold digital tokens to U.S. investors without registering the ICO, a requirement under U.S. securities law. That is correct. They did. The question is, does it fall under U.S. securities law? An ICO is a form of crowdfunding that can be a source of capital for startups without the need for angel investors, banks, traditional funds. Blah, 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 blah. We all know that. The KIN token was sold in 2017 and was marketed as an investment opportunity, the SEC alleges. The SEC further alleges that the ICO followed Kik's losing money for years on its sole product, an online messaging app. Absolutely. It's a tech company. They use the tech model. They're going to lose money for years and then try to get the people. They got 300 million users. Get the people in, and then you make money. It's the Amazon form of business model. And many tech companies in Silicon Valley use that form of business model, and it has worked for many of them. So I don't see the fact that they lost money as a big deal. And the SEC is saying, well, since they were losing money over here, they used the KIN token to try to make money and cover their losses. I don't think that was what was going on. Anyway, in a statement from the SEC says that Kik pivoted to a new business type, which it financed through the sale of 1 trillion KIN tokens. That's going to be a tough sell as far as proving that the company was pivoting, given the business model of a tech company that you lose money, but you're gaining continually. And Kik will probably use this as their defense. We were gaining customers. That's the business model of a high tech company. Kik raised more than $55 million from U.S. investors, according to the SEC, and its complaint alleges that KIN tokens traded recently at about half of the value of public investors paid in the offering. So that is true. But all the ICOs are down from, not all of them, but many of them are down from their original price. Now, here's an interesting thing. If you were part of the KIN ICO, which I was, I got in, I was getting in every ICO back then. The SEC lawsuit is going after reimbursement for the investors, which is kind of cool since the KIN token has been destroyed. If we look at the KIN token right now, they're down like 27% on the news, but it's trading at 0.000025, and I think the ICO averaged about 0.0001. So it could be a 4x gainer, at least from the point right now, if the SEC wins, plus interest is what they're going for. I'm just throwing that out there because there's going to be more lawsuits. I don't think the SEC is going to go after many companies, just the companies that really push the boundaries and piss off. I said this way back when they first issued the DAO ruling. The SEC issued a DAO ruling, I think it was the end of July in 2017, where they ruled that the DAO was a security, but they also said that Ethereum probably was, but is not now, and Bitcoin is not, and Litecoin is not. But that was a real pivoting point because that's the only thing the SEC really said about cryptos. So if companies worked with the SEC is not going to go after them as they establish these new rules. Because the rules were very vague, but Kik and KIN, it looks like they really pushed the boundaries. So yeah, if KIN prevails, Kik prevails in this lawsuit, that opens the floodgates for ICOs, and it will send the SEC scrambling. And I don't know who's going to win. It's kind of 50-50 because I don't think KIN should be punished because the SEC didn't have any specific rules for cryptos. They're going to try to apply the same rules using the Howey test for KIN that they applied to everything else in the traditional stock market. And cryptos are very different. You have tokens, you have currencies, you have different use cases. You got software. Veritasium is a software. Now, Veritasium, I'm not worried about at all. They're working with the SEC. The ICO went off way before the DAO announcement, the DAO SEC announcement. It was I think back in June is when Reggie ended his ICO, and it wasn't until late July that the SEC made their first inkling that they're going to be regulating cryptocurrencies. So I think very is very fine. Obviously, Theta is fine and Theta Fuel because although they happened after the announcement, they never ICO'd. Remember, they pulled their ICO at the last second. But there's others kind of in the gray area, but I think if the company works with the SEC, I don't see the SEC going after the company at all, and they can continue on their business model. I would say the SEC needs to set out some firm guidelines as to what the law is, because it's still, to this day, 10 years later, very ambiguous. And that's the idea, I think, going forward. I said this a couple of weeks ago, that June will be the month of regulation. I do think if smart regulators come in and do smart regulation, that's a good thing. I mean, we can't have the Bitconnects of the world anymore. But that's the problem, is we don't have smart regulators. We have criminal regulators who are trying to retroactively charge companies because they couldn't do their job and create sound rules and regulations 5 years ago, 6 years ago. Everybody was screaming for regulation, and the SEC would not do it. That's the criminal part of the regulators. But we will see what's coming, because the regulators are coming. I guarantee you that. Anyway, here's what the CEO of Kik came back with. This guy, Ted Livingston, said he expects Ken's momentum to grow and the company to fight the claims. We have been expecting this for quite some time, and we welcome the opportunity to fight for the future of cryptos in the United States. We hope this case will make it clear that the securities laws should not be applied to a currency used by millions of people in dozens of apps. I don't think that Ken is a currency. I think he's misstating it. It's a token used in their business model. Ken is being used by more people in more apps every day, and come trial, Ken will be the most widely used cryptocurrency in the world. What? That's what that guy said. Come on, was he drunk? Well, maybe he's thinking, well, we have 300 million users, and each user counts as, well, wait, but it's not a cryptocurrency. It's a token used within the Kik system. See, it's all confusing. It's all confusing, and the SEC needed to clarify, and they still haven't clarified because they probably don't know. Livingstone continued by saying that while the SEC's actions are a challenge to overcome, the actions, quote, won't affect the use, transferability, and characterization of Ken, and we expect momentum in the Ken ecosystem only to grow. And, oh, by the way, they're doing their transfer to mainnet. If you haven't migrated over to their mainnet yet and you own Ken tokens, go to their website. I think it's ken.com or ken.org or something like that. Go to their website. On the top, they have a migration link, and it shows you. It's pretty easy to do. It shows you how to do it. So here's their take, and this is what their general counsel is saying. Quote, among other things, the complaint assumes incorrectly that any discussion of a potential increase in value of an asset is the same as offering or promising profits solely from the efforts of another, that having aligned incentives is the same as creating a common enterprise, and that any contributions by a seller or promoter are necessarily the essential managerial and entrepreneurial efforts required to create an investment contract, she said. These legal assumptions stretch the Howey test beyond its definition, and we do not believe they will withstand judicial scrutiny. Who knows? Who knows if they will or if they won't? I don't think this will clear it up either, because basically they operated as if they could do anything they wanted and say anything they wanted, which they did. Not covertly, but it was in the hype of the hype. And everybody was saying, yeah, get our token because it's going to make you more money. Well, if you say that and it's a security, that's a violation of the Howey rule and all that stuff. Clear as mud, right? Okay, here's the SEC. Here's what they said. The SEC today sued Kik Interactive for conducting an illegal $100 million securities offering of digital tokens. The SEC charges that Kik sold the tokens to U.S. investors without registering their offer and sale as required by U.S. securities law. They did. That is absolutely correct. The question is, does it fall under the definition of a security. And SEC is saying yes, and Kick is saying no. But there's other things that they're going after them for. The first is going to be hard for the SEC to prove, given the business model of the high tech companies. It says, as alleged in the SEC complaint, Kick had lost money for years on its sole product, an online messaging application, and the company's management predicted internally it would run out of money in 2017. That is not unusual in Silicon Valley. That's when they get angel investors in. That's when they get the big money to invest in these startups, because they don't look at the money burn. They look at how many views are they getting, how many new subscriptions are they getting, how many people are turning on to the Kick app, and they had 300 million followers. In early 2017, the company sought to pivot to a new type of business, which is financed through the sale of 1 trillion digital tokens. They're going to have to prove that. And maybe they have internal documents that, okay, we're about to go under. Maybe they have that. I don't know. Kick sold its Kin tokens to the public and at a discounted price to wealthy purchasers, raising more than $55 million from U.S. investors. The complaint alleges that Kin tokens traded recently at about half the value that the public investor paid in the offering. Well, all cryptos are down more than half from their ICO. Not all, but most, because we're at the down end of a market. When it flips back up, they're going to run up again. So, yeah, and I mean, I would benefit if the SEC won, because I bought Kin tokens at $1 or 0.0001. So I will get 5 times or 4 times what my current holdings in Kin is. Something like it. Plus interest is what they're going for. So for ICO, if guys who bought into the ICO and haven't sold their Kin, you just hang on and wait, because it might be a loss win. It might be a loss for the crypto industry if these are. See, this is probably the wrong token to really do this deep dive on. But hey, it is what it is, and they're the CEO, God bless him, is willing to fight the SEC. The complaint further alleged that, now this is the part that got him in trouble. And I mean, the biggest part that got them in trouble is they wouldn't work with the SEC. The complaint further alleges that Kick marketed the Kin tokens as an investment opportunity. Kick allegedly told investors that rising demand would drive the value of Kin, and that Kick would undertake crucial work to spur that demand, including incorporating the token into its messaging app, creating a new Kin transaction service, building a system to reward other companies that adopt Kin. At the time Kick offered and sold the tokens, the SEC alleges these services and systems did not exist. There was nothing to purchase using Kin. Well, that's any new startup. Well, see, that's the other thing. This was already an ongoing company. It's hard to relate this to one of the ICOs that was just a startup. Kick also allegedly claimed that it would keep 3 trillion Kin tokens. Kin tokens would immediately trade on secondary markets. You can't say they're going to immediately trade on secondary markets unless you've already got something in place. And Kick would profit alongside investors from the increased demand that it would foster. The Kin offering involves securities transactions. That is a statement from the SEC. Kick is claiming the opposite. And Kick was required to comply with the registration requirements. This is the part that might get them in trouble. Kick told investors they could expect profits from the effort to create a digital ecosystem. Future profits based on the efforts of others is a hallmark of a securities offering. Well, it's not necessarily. It's not always. It's one of the things. But yeah, it'll be an interesting court battle. The SEC complaint charges Kick Interactive with violating the registration, blah, blah, blah. And then I looked through the complaint, and it was interesting. There's a lot of good, interesting stuff. Yes, Kin was clearly acting as if it wasn't a security and didn't worry about too much SEC stuff. They filed the right forms, that they were exempt from the securities laws. And so they did the right thing, but then they kept going, and and it wasn't any question. Then that's the key. That's where we get to the key. I'm going to go down to, let me do a search. The DAO. Oops. Let me try this again. So here's a key part of this, number 17. On July 25th, 2017, remember that date, July 25th, 2017, approximately 7 weeks before Kik started the public sale of Kin, the SEC issued what is often called the DAO Report. The DAO Report advised those who would use distributed or blockchain-enabled means of capital raising to take appropriate steps. See, this is the SEC. They're saying, oh, we told you what to do. And then they're just saying, well, what do we do? Oh, take appropriate steps. That was pretty much all they said. To take appropriate steps to ensure compliance with the U.S. federal securities law, and found that digital assets at issue in that manner were securities. That is not what they found. That is not true, because they also said that Ethereum was not a security, and Bitcoin was not a security, and Litecoin was not a security. So, yeah, I don't know what the SEC is saying there. Even prior to the DAO report, however, Kik had been informed by one of its consultants that Kin offering was potentially an offering of securities that needed to be registered with the SEC. So what? I mean, everybody was saying that. Is it or is it not a security? And the SEC refused. And this is going to be huge in the trial. They refused to put any regulations on cryptocurrencies. How can they go back now and say, oh, by the way, you violated these regulations that we didn't tell? Everybody was going to the SEC. What do we do? What do we do? And the SEC would not make a ruling on it. Anyway, very interesting stuff. And in the end, it talks about the remuneration or the penalties if the SEC wins. Kik's going to have to pay back all the ICO investors at the original price plus interest. Now, I don't know if Kik has the money to do that. It might just put them in bankruptcy and destroy them. I don't know. I don't know the financial wherewithal of Kik. But if you're an original ICO investor, hang on. It might be a win-win for you. I mean, if the SEC wins, you'll get your investment back, and it's right now a fourth of what it was. But if the SEC loses, it might be a great thing for cryptocurrencies, and the new ICO rush might begin, which could kind of be scary. But yeah, keep an eye on this court case, and keep an eye on Road to Ruta, because I'll keep you updated. And if you want more, I'll be posting more on the Patreon channel. I just posted an interview with Silver Doctors. I just bought more silver yesterday. I admit it. I got it right here. Don't you love that sound? Silver Eagles. I got a few of them. That one's not shaking. They probably shortchanged me. Oh, by the way, if you're in the Bay Area, Castro Valley Coin. Castro Valley Coin. Greg and Apollo, awesome guys. I think they have a couple Road to Ruta coins in there that they're selling as well. I'd say, where'd you get those? Well, people will sell Road to Ruta coins on occasion. The new ones with the numbers on the bottom. I don't know what they're selling them for, but go by and say hi to them. I go in there every once in a while. I might see you. And yeah, get your silver. Oh my God. It's OMG time for silver. The manipulation is not going to last the year. They bumped back the sentencing of the JP Morgan trader busted for rigging silver, and yet JP Morgan is still the largest warehouse holder of silver on the COMEX, the custodian of the largest ETF in SLV, and the largest player in silver, even though one of their traders has been charged with rigging the markets, is being sentenced, and said and is providing testimony that his senior management taught him how to do it and told him to do it. That would be Blythe Masters and Jamie Dimon. This is gigantic for silver. These criminals need to go to jail, and I think they will. This year, there's going to be some serious crap going down. So get your hands on silver now at $14.50 or something ridiculous like that. And if you're having gold, oh my God, 90 to 1 right now. 1 ounce of gold, go into your silver shop and trade it for 90 silver ounces. That is insane. That's at all-time highs. Well, I think the all-time high was like a little over 100. But it is insane. It is screaming at you, hey, idiot that owns gold, swap it all for silver. You got that? Hey, idiot that owns gold. You're only an idiot because you're not swapping it for silver. It was a good investment to buy gold. It's a massively better investment to swap that gold right now at 90 to 1 for silver. This is the no-brainer of a lifetime. And I'm going to talk about that later today on Patreon. Please join the Patreon. Road to Ruta, all kinds of great posts there. And there's Litecoin Lisa. We had a great chat. And yeah, everybody join the Patreon and join the Road to Ruta private road, which you get the Patreon and more. Right now, the fear index is screaming buy at cryptos too, by the way. This thing's been in the green for a long time. You want to sell when it's in the green and buy when it's in the red. It's just so easy. And this is what you get on the private road, as well as all these other things. So if you're interested, go to roadtoruta.com, and I'll talk to you guys later.